Welcome to Pro News Weekly. Let's dive into the weekly updates on the financial markets. The dollar has been on an impressive streak, gaining almost daily, particularly against emerging market currencies. This is the currency market's reaction to Trump's higher chances of winning the presidential race, fueled by his promises of increased trade tariffs. Even the anticipation of these measures is driving up the U.S. currency. The dollar index has rallied almost 3.7% from the local lows of 3 weeks ago. While impressive, this is only a recovery from 13-month lows to the July heights. Technically, the dollar index has climbed to its 200-day moving average. Perhaps it is beginning to test the strength of the downtrend set in motion by the weakness of U.S. monetary policy. However, Forex traders should bear in mind that the strength of the U.S. currency is largely due to a sharp softening in the tone of monetary authorities in other developed countries. Therefore, the highs in equity and gold indices will be discussed next. The S&P 500 index hit new all-time highs at the beginning and end of the week before a small correction on Tuesday. This is the most dangerous pattern for bears as it quickly recharges the bulls without accumulating overbought conditions. The stock market is rising again on the back of record earnings from companies listed on the stock exchange. They are easily beating analysts' forecasts, which were very pessimistic before the reporting season started. Gold returned to all-time highs at the end of the week, gaining 2% in the last 5 days. The spot price broke above $2,700 per troy ounce for the first time. This is an extension of the bullish momentum from October 10th after weekly U.S. employment data. Technically, this is a classic return to growth after a small shakeout of positions in the early days of the month. Further movement in the Fibonacci pattern suggests that the $2,820 area is the next target to the upside. In general, the markets are now experiencing a very unusual combination of dollar and gold rallies. It is more common for them to move in opposite directions and for them to move together only during periods of heightened demand for defensive assets, for example, because of geopolitics. Oil has lost around 5% since Monday. The violent sell-off on Monday and Tuesday was replaced by a stabilization in the second half of the week, just below the $75 per barrel mark for Brent. The price of oil had risen rapidly in early October. However, all bullish attempts bumped into resistance in the form of the 200-day moving average just above $81.20 a barrel. And in the outgoing week, the price rolled back below the 50-day moving average at $75.70. The weekly picture is even bleaker, with the price below its 50 and 200-week moving averages. This is a bearish sign, reinforced by a death cross, a drop in the 50-week average below the 200-week average. Sellers in oil took the lead on reports that the U.S. is strongly discouraging Israel from attacking Iran's oil facilities. This is an important signal that the U.S. is playing on the bearish side now. Among the longer-term factors, we highlight a new production record of 13.5 million barrels per day in the U.S., a slight increase in drilling activity, and a less severe impact from Hurricane Milton than originally estimated. In addition, OPEC is lowering its estimates for oil demand growth. Bitcoin has gained over 12% in the last week, making 2 attempts to break through the $68,000 level. In our view, the bulls in Bitcoin already showed their strength on Monday, as they took the price above the 200-day moving average in one fell swoop, breaking through the previous highs and the upper boundary of the multi-month descending channel. The next growth target looks to be the 71,000 to 73,000 area, where strong resistance and historical highs from March are concentrated. The key events for the market this week will be the interest rate decision from the People's Bank of China on Monday and the Bank of Canada's rate decision on Wednesday, where there may be a 4th cut this year. The release of preliminary PMI estimates on Thursday could fuel volatility in European markets. The euro has often downplayed the divergence between expectations and reality. as economic trends are key to the ECB's next steps. The reporting season is gathering pace. More than 2,200 companies around the world report this week. In the US alone, over 500 companies are due to report. Individual names of interest include Lockheed Martin, a military contractor, on October 22nd. Reports from retail favorites, Tesla and Coca-Cola, on the 23rd, and Amazon reporting at the end of the week. Remember that this is the week of final preparations for the US election. Candidate statements may get louder, and markets may react more strongly. Stay tuned to Pro News Weekly for more updates on global markets. Like, share, and subscribe.